What's going on, guys? Today we are going to talk about Alibaba, and this is a stock that is down over 44% over the last 5 years. And what I want to do in this video is I want to take a look at how Alibaba compares to the broader market, because there are some similarities between what is going on with Alibaba's stock and what is going on in the market. Then I want to jump into some of the details behind why Alibaba is down so much and how they appear to be turning a corner, especially in terms of their revenue and EPS numbers. And then finally, we will leave off this video by going over where EPS could be headed over the next 1 to 2 years and how that could affect the stock price and valuation. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start by taking a look at Alibaba's stock chart. And as I mentioned, they are down over 44% over the last 5 years, which is absolutely insane. If we look from their all-time highs of around $310 to where the stock is at now, we can see that the stock is down almost 75%. And over the last year, it's actually up around 11%. However, if we look at the last couple of months, we can see that in July, the stock peaked out around $102. However, it is down around 20% from those highs. So it's important to compare charts to the broader market, because this gives you an idea of whether the market is in a downturn or whether the company is hurting individually. And what we can see when we look at the S&P 500 is that it peaked out in July as well, and it is only down around 8% from there. However, you would expect a stock like Alibaba that has a little bit more volatility, a little bit more risk to it, to be down more than what the broader market is. So when I look at these two charts side by side, the S&P 500 and Alibaba, what this tells me is that the broader market over the last 3 or so months has really just gone through a little bit of a downturn. And I think the decline in Alibaba's stock price over the last month has to do with the broader market and not how the company is actually performing. And that is because of statistics like this. We can see that the world's second biggest economy, China, has expanded 4.9% from a year earlier. This 4.9% is GDP growth. And on a quarterly basis, they actually saw their growth accelerate to 1.3% in the third quarter compared to 0.5% in the second quarter. And this puts the Chinese economy back on track with what the government was hoping. They were targeting around a 5% GDP growth in 2023. And this overall is going to impact companies like Alibaba, as they are a large manufacturer and supplier within China. And they have been hurt over the last few years by a lot of the lockdowns that we have seen throughout China that have really slowed down their business. And the lockdowns haven't had a huge effect on Alibaba's revenue numbers. They hit around $134.5 billion in 2022, and they've seen a slight decline over the last year, down to $128 billion in revenue. However, year over year, they are getting back to growth. We can see that they have grown around 5.2% for revenue. That is low, but they did see a very large pull forward of demand over the last 3 to 4 years, as they went from around $53 billion of revenue in 2018 to over doubling that number by 2022. Their EPS numbers have struggled a lot more over the last 5 years. We can see that in 2019, they actually peaked out at a trailing 12-month EPS of $9.37. However, if we look to where revenue peaked, that was in 2022. They were only bringing in $3.59. That is affected by a couple of negative EPS numbers, and we have seen their EPS on a trailing 12-month basis fall all the way down to 92 cents. However, over the last 3 quarters, we have seen them get back to larger EPS numbers: $2.60, $1.22, and $1.83. And this next quarter, I would expect them to continue that trend, and that will really help grow their trailing 12-month EPS numbers, as this negative $1.09 will fall off. And right now, analysts have an average EPS estimate for the third quarter of $2.12 on a non-GAAP basis. If we look at it on a GAAP basis, that would be somewhere between $1.50 and $1.75. And when we look at Alibaba's trailing 12-month EPS numbers, we see that that will actually get us very close to the numbers we saw in 2021 of around $7.20. And analysts are projecting these numbers to continue to grow. We can see that for the current year of 2024, they have an average EPS estimate of $9.10, a low of $7.68, and a high of $9.93. If we look at 2025, there are 30 analysts covering this stock, and they have an average EPS estimate of $9.98, a low of $7.27, and a high of $12.27. And in my opinion, when we look at the valuations for Alibaba, they are extremely low. Right now, the trailing 12-month PE ratio is sitting at at 18.14. And if we actually remove the negative $1 that we saw last year at this time and plug in the projected EPS numbers for the third quarter of this year, that trailing 12-month PE ratio drops down to around 11. And their forward PE ratio is even lower, sitting at an 8.47, and that is the lowest it has been over the last year. So we could take those EPS estimates for 2024 and 2025 and figure out where the PE ratios are. And what we can see is that the average EPS estimate for 2024 was $9.10, and that is equivalent to an 8.76 forward PE ratio. If we look at 2025, we have an average EPS estimate of $9.98, and that is equivalent to a 7.98 forward PE ratio. So for a price target, what we can do is we can run a ratio between where we think the forward PE ratio should be and where it currently is at. And currently, based off 2025 numbers, we had that forward PE ratio of 7.98. And in my opinion, we could see a potential PE ratio of anywhere from 15 to 20. And what those would be equivalent to is a price target of $150 to $200, which would be anywhere from a 90% return all the way up to 150% return. The low EPS estimate for 2025 resulted in a current PE ratio of 10.96. And if we compare that versus a 15 to 20, that would bring us up to a price target anywhere from $109 all the way up to $145. And if you like using trailing 12-month PE ratio, I even did this final calculation. 11.07 is the trailing PE ratio that we will get if Alibaba meets expectations in terms of their EPS in the third quarter. And if we again compare that to a potential PE ratio of anywhere from 15 to 20, that would result in a stock price of anywhere from $108 all the way up to $144. And all of these numbers don't even account for the fact that analysts are very bad at predicting EPS numbers for Alibaba. We can see that over the last year, they have beat analyst expectations by double digits every quarter. And in the most recent quarter, analysts were projecting $1.99 of EPS, and Alibaba came through with $2.38, which was almost a 20% beat. And it'll be very interesting to see what Alibaba reports in their next earnings announcement, which is expected on November 16th. So in my opinion, I think Alibaba is in a great position to capitalize on economic growth throughout China, and that is going to have a big impact on their EPS numbers, which I believe investors will look at and see that Alibaba needs to have an increased valuation. And that is how I am getting to those price targets. So make sure if you are doing those calculations that you are using numbers that you are comfortable with. So that is all my opinion. Remember, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.